Hello, we're back today with Kyle from UP.Labs. Kyle, how are you doing?
Hey, doing great, Dan. Thanks for having me today.
Oh, no worries at all. Listen, we've got an amazing chat lined up. I'm really looking forward to diving into what UP.Labs is and specifically how it's a little bit different from other VCs. So we're going to take some time to dive into that. Before we go right into that, do you want to sort of give everyone a 2-minute whistle stop tour of who you are and how you got to where we are today?
Yeah, sure. I'd be happy to. So, hey, everyone. Kyle Emory. Started out my career working for Accenture doing management consulting. So, I had a bit of a systems orientation in the strategy and strategic projects that I helped lead and deploy. Left there because I had a ornate interest in retail and joined a plus size women's fashion company in New York City called Full Beauty Brands, where I worked with their executive team leading strategic initiatives from end to end. So, building homegrown products and kind of changing and evolving the organization as we were transforming from a catalog retailer into a digital player, which was just a fascinating and amazing experience with amazing people. I left there to go get my MBA, take a break for a couple of years, and really wanted to figure out and answer two questions. First is, who am I as a leader? And next was, where within the retail space did I want to spend my career? And, ultimately ended up at Amazon, where I really wanted to learn how to lead frontline teams in a large capacity. And so I joined a fulfillment operations center as an outbound operations manager out in Carlisle, Pennsylvania. I did that for a couple of years. This is 2019. And so I was there as the pandemic happened and started to transform the business during the start of the pandemic. Ultimately, where I transferred into the logistics division and moved out to Los Angeles, both for work, but also to chase after my now wife, happily married out in LA, where I helped scale the logistics division at the start and peak of the pandemic. So we went from a handful of warehouses to over 20 over an 18-month period. And I played a large role in helping kind of evolve some of these the different warehouses, as well as launch my own. Ultimately, to the point where, I got at the end of the pandemic, I decided, I want to give startups a try. Decided to leave Amazon, had something in mind, but took a step back and was like, look, I think it may be better to get a bit of a better understanding on the process of building venture, which had my attention on the venture studio model kind of as the entry point for me. And then came across UP.Labs, which is a bit of a different take from your traditional venture studio, which was is the right place at the right time. UP.Labs was starting just over 3 years ago. Actually, today is my 3-year anniversary with UP.Labs. Joined and have been running ever since and loving every minute of the adventure that I've been on with UP.Labs.
So sort of a e-commerce retail background with Amazon. The startup that you want to do in the future, have you got an idea for it already?
So it's interesting. So I had one. It was closer to the mental health tech space,
Okay.
and I kind of honestly realized, I was like, look, like I don't have the background in the business of mental health. I took a class on blockchain, like through one of the online courses at MIT, but it was like, doesn't make me a blockchain expert by any means. And so I just was kind of like, look, I think it's smarter to start and learn the basics of how to build ventures versus trying to build one without really kind of that full understanding of that business area at the start. So that, 3 strikes was that I was out. And so I was like, let's crawl, walk, run. And we're certainly running at UP.Labs today.
Nice. Awesome. Okay. Well, you mentioned a little bit about the unique model of UP.Labs. We chatted a little bit about it. Can you explain what that unique model is and sort of how it would differ from a typical VC firm?
Totally. So UP.Labs at its core is a venture lab that uses vertical AI and advanced analytics to ultimately build B2B ventures. And the way that we do that is we have a really unique ecosystem. So our ecosystem has kind of 4 big quadrants. You have UP.Labs as a team, which is established by execs that came from the corporate venture capital world and kind of have really learned throughout their career and have built hundreds of kind of CVC type of ventures and startups. So that's kind of like the group of people that make up our team with all broad swaths of background. You have some from CVC, you have others like me who come like as operators and builders within a particular vertical. And then we have a partnership with Ventures Up Partners. And so what's unique about this is with this partnership, the business model of UP.Labs is that we actually work with them and they help fund the seed rounds of the ventures that we're building. Because the real unique part of our business model is we have long-term partnerships with strategic companies, with corporate partners, as we call them. And so we have partnered, our initial flagship partner was Porsche. We've worked with Alaska Airlines, currently working with JB Hunt, as well as recently announced Wabash, which is a manufacturer in the truck trailer manufacturing space. And we essentially build these vertical AI solutions within each of those particular industries. And so we have kind of those three parties as the core part in the 0 to 1 year one phase. And we build these ventures. We build 2 every year, and we're evolving the way that we do that. But once we do that, then we start to recruit and hire world-class CEOs who have been previously successful founders in that 0 to 1 phase. So, veterans that have had $100 million, billion-dollar exits that we recruit to then run the newly incubated ventures that we built. And then they scale those in the market, and then we start our process again. So really, we have a recurring annual 18-month cycle where we identify what are the core problems we're solving. We're very problem and friction led. And once we have those problems, then we start to innovate and ideate businesses around those problems that meet the needs of our corporate partners, but then also scale more broadly within that vertical, within that market, so that then we can actually make sure that we're building viable businesses versus just custom solutions for an individual strategic.
Okay, so let me just make sure I've got this right. You've got a corporate partner, who has a problem. Mm-hmm. You guys spot the problem and say, hey, we can help you solve this. You guys as UP.Labs build that sort of 0 to 1 MVP type product, get it off the ground with help from your venture partners who put in the money to fund it. And then you build a team around the product and help take that product essentially to the wider market, right?
You got it. And one thing I didn't mention is that these corporate partners, they're not only co-development partners of giving us access to their core problems and as well as their data and systems and their team, but they're also our first customers. And so we're building these businesses, but then we're also still working with them in a commercial manner with the ventures that we're building, so that then they become our first customer for these 2 new ventures that we create, which is what we believe really gives the startups that we're creating a distinct advantage relative to those in market, because we solve a lot of those core problems, right? We have a venture partner who supports us in our growth. We have a corporate partner who supports us in our contract, our commercialization of these products. And then we have world-class executives who are proven veterans that have done it before to actually go and do it again. So we try to give as far of a head start in a year or 18-month timeframe, so that then once we turn it over to that CEO and their team, they can really start to scale it and run at full velocity.
And what's the hardest part then about getting from sort of that initial sprint? How do you take that to market? Is the problem sort of finding other buyers? Is that an issue, or is it finding the exec team to come in and run it? What's the biggest problem there?
So it's a great question. I think the speed at which we move creates like truly an MVP, right? And what we've been working through and how we've been evolving our model over each year that we do this cycle is, how do we get a little bit further ahead on the viability of our MVP? How can we make this closer and closer to enterprise grade level, so that by the time we're at the end of our sprint, our annual sprint, that product is ready to be commercialized and it has the capacity for multi-tenancy and, able to service multiple different customers. And so I'd say that has been the biggest thing that we've been working out. And you kind of have to thread the balance of not over customizing the MVP that you're building and making sure it's generalizable. And so the way that we do that is we're making sure that while our product and engineering team are building the business, the commercial team, which is part of my role, I lead the business and growth function on one of the labs with a couple of partners. And what I'm really focused on is, how do I make sure that what we're building to and building for is incorporating the needs of the broader market beyond just that specific MVP that we're doing? So that's the thing that you kind of have to balance. And I'm sure you've had exposure to this too with social scalers. Like, how do you find that story and make sure that you're showing a product that's actually useful when it's still being built? right? How
Yeah.
are you flying that plane while you're making the plane? And that's the thing that is difficult. But every year we're getting better at doing, so that ultimately we can create a meaningful sales pipeline for the executives that are coming in to then go and talk to those customers who've demonstrated the need to solve a similar problem.
So how do you do that then? Because we, to give like a personal example, quite close to, I guess, the agency space. And the typical route for a lot of agencies is what they would call like productization. So they define what service they're doing and what problem they're solving, do that for customers and almost create like custom solutions for each customer in the realm of service delivery, and then try and productize it to a point where they've got like their onboarding flow is absolutely set. They know what they're doing. They only on board on Wednesdays and they only bill on these days a week, and no work starts until the invoice is paid, and your onboarding takes 2 weeks, and they know exactly what they're getting at each point. And the customer almost has to fit to that product and that service. And that takes like iteration, I guess, within the whatever service you're providing.
Mm-hmm.
Is it a similar sort of process for you guys? Whereas, you're building 2 companies every year, right? So how do you iterate that quickly and get, I guess, market feedback to build something that's more of a product and less of a service?
It's a great question, Dan. And the way that we've constructed our model is we've really broken it into 2 6-month periods. The first 6 month is like, we have like 2 stages of the first 6 months. The first is really problem identification and validation. So it's what we call our problems worth solving. So we'll explore hundreds of different problems that the corporate partner brings to us at first. And then within those problems, we'll try to discern which ones are specific to your business and which ones are broader problem that market is facing. So first and foremost, we identify what are the problems we're solving. And in that process, we're talking with advisors, experts, people that really understand that industry, so that we have a comprehensive view of what we are confidently saying are the problems that we believe are worth solving. So in a recent example, we went from 40 to 50 problems down to 6 problems we're solving. So we bring those problems to those different stakeholders, our VC, our corporate partner, our lab leadership, and we vote and decide which are the problems that we want to go solve. Well, these are problems that we think are worth solving, and then which ones do we actually move forward with to solve. So we went from 6 down to 4. Now, once we've done that, what we do next is that's when we start to ideate. And we ideate around those 4 problems. So we'll come up with a variety of different ideas based on, our experiences as entrepreneurs, as well as, research in the market of like what is current and new of like different applications of technology. I'm sure everyone has talked about the evolution and the step function jumps on AI. So incorporating a lot of that in how we think about these early business models, start to build concepts out that will then go test in market. So we'll test the concepts before we built anything. We'll test them with our corporate partner to see, is this going to solve that friction, that problem? And then we'll also go into the market and do tests with prospective customers in the future to see like, well, do you have this problem? Would this solve that problem? And we're very much evidence led. So once we're figuring out what are the concepts that we're ideating around, we're essentially driving towards what are the businesses worth building. We have problems we're solving and then businesses worth building. And that's very much led. And we have like kind of a check-in where we go from concept to like a short list. And then that example I was giving you, we went from maybe 40 or 50 concepts down to 5 that we presented to our investment committee. And we narrowed it down to 4. Once we had those 4, then we really start to think about, how is this a business? What is the business model? How are we going to market? Who is the competition? What does the tech stack look like? All of these types of things that you would do before you're ever even coding, so that you have a really rich understanding of a roadmap and a plan that is essentially going to be like, we're going to serve you, our corporate partner, first as our first customer. And then once we do that, we'll start to really build out prototypes and create an MVP and run pilots with them to validate those businesses. But before we get to the incubation phase, that just wrapping up the first 6 months, like we then go from those 4 down to 2. And then we vote as a committee on what are those 2 businesses that we want to build. And then we turn the page into, now, okay, let's start building them. Let's start incubating. Let's build the MVP. Let's go very much in a traditional 0 to 1 sprint of incubation with sprint planning and managing it like within these individual units with our still our lab team, but we're moving very quickly and we're iterating while we're doing that, where we're running pilots with our corporate partner. We're looking for our CEOs that want to ultimately come on and take over these businesses, and then finalizing all of our commercial agreements with our corporate partner for these two businesses, while concurrently building our sales pipeline to start to do our outreach externally, so that then we can have that ready to scale once that first year hits, which is the beginning of that venture's actual timeline, out of years, graduating out of year zero.
Nice. Okay. And so just thinking about like, keeping that chain of events going, what does that commercialization look like? And what does that building a pipeline look like for each of these businesses? Because I assume it's quite different for each company, right?
It's a really exciting time right now because of all of the advancements. Like I'm sure you're seeing a lot of these like CRM tools like Clay and other businesses that are kind of changing the game a little bit. We're really kind of revisiting and rethinking, how do we build an early stage sales organization from day zero, right? From the day that these two businesses get greenlit to be incubated and built. And so the way that we're going about it is honestly like I'm doing this right now. I'm thinking through like, how do I want to set this up? How do I think about my target list and outreach and sales decks and positioning for each of these ventures that we're building? Partnering, with our corporate partners to get an understanding of like, okay, like, do we think we go this direction for go to market or that direction for go to market? Getting their input and considering that as we're building, but then essentially preparing for our CEO to come in and decide which way they want to take the organization. But it's a bit of a mix where it's like I right now am preparing that for our future CEOs that will come in, and I'll have had several sales conversations in market within the verticals that we're targeting and the ICP that we're focused on, so that I have warm leads that are ready, but not anything that is already locking that executive into any one particular choice. Because really the objective is, by the end of our incubation timeframe, is to have letters of intent for future customers, securing some potential pilots once we've been able to scale these products within our corporate partners organizations, so that then they have kind of the flexibility and the autonomy to make the decision to take the business in the way that they'd like to. But our responsibility is to really make sure that we have those tools available to them, so that when we pass the baton, they're sprinting towards the next milestone or baton pass.
Sounds like there's a load of benefits to this model specifically, right?
And
What are some of the I was gonna say,
Dan,
what are some of the drawbacks? But yeah.
So I forgot to mention a really core part. Sorry to interrupt you. Forgot to mention a really core part of our business model. Like one of the other parts that we found, at least in our early phase, and I'll answer that question of some of the drawbacks, is, the intention of these is that these startups that we're building are built at an accelerated timeline, not only in terms of how they're built, but with the end in mind of potential customized NA for our corporate partner. Well, they'll have an option to buy back these companies in a 3 to 4 year timeframe. And so that is something that we're also trying to disrupt within the corporate venture capital space. You have your traditional timelines between the 5 to 7 year duration before you're exiting or meeting a liquidity event. We're trying to accelerate that timeline to 3 to 4 year timeline. Now, on that point, to your question of what are some of the drawbacks, is we're a startup building startups, right? Like I joined this organization 3 years ago at the early stages. I was talking with my boss about it yesterday, where he walked in on day one and there were no doors in our office, right? So it's like truly a startup that's building startup, very inception-y for you. But I'd say, like, when we think about what we've learned over the past 3 years, the first one is making sure, as I mentioned a little bit before, that the solutions that we're building are in a position to be as close to enterprise grade as possible, right? Like true MVPs, not just a prototype. And I think at the beginning we learned, it's like, okay, like this is our prototype. It didn't have the degree of viability that now is our expectation to drive towards. And so we're continually refining the way in which we're advancing our products to be enterprise ready at scale. So that's one. I'd say the second one too is like really kind of starting to understand the most effective way to transition these startups from UP.Labs to independent portfolio companies. And that is something that we've really been focused on, is like that transition with the inbound, like the incoming leadership team is so critical. And we want to make sure that we're making their job easy. We don't want them to be having to go and do any rework on the things that we've built. And so we're really zeroed in our kind of our next chapter, our next era of UP.Labs, on how do we create services that are essentially enabling that continuation of support beyond the contract timeframe that we have with our corporate partner. Because these corporate partnerships, sometimes they're 1 year, sometimes they're 2, sometimes they're 3 years. But depending on that, we have a very tight window on that transition. And so we've been really trying to figure, and why I've said earlier on, like either 12 or 18 months, we're evolving the way that we're thinking about an extended incubation and the services that we're providing as a more centralized engineering team that can start to develop some of these vertical AI solutions for our business on a repeatable basis, and be able to solve other problems that these corporate partners have that may not be problems we're solving, right? But it's like, look, I still have this problem as a business, but we can't build a business around it. Doesn't make that problem any less significant to try to solve. And so those are types of things that we found are new needs and new problems that we want to solve as UP.Labs. And that's kind of how we're positioning to address it. We're constantly iterating. We're very humble learners in the way that we build, because we learn, like, as you know, like when you're building a startup, you really have a line of sight on maybe a week, like if you're lucky, on like what's going to happen if you're moving super fast. And you have to have the flexibility to be able to pivot and evolve as you're getting new information. So we're constantly refining our model, and we're self-aware enough to know that, look, we had our MVP, and now we're getting pretty confident on what this next chapter is going to look like for the evolution of UP.Labs.
And just quickly before we get into that sort of next chapter, can you sort of paint the picture on what some of these startups look like? Like, what problems are you solving for your corporate partners?
Yeah, sure. So an interesting one that I'm working on right now is focused on the cost, pricing, and configuration space. So CPQ space for quoting for large manufacturers, right? Okay. So large manufacturers within the truck trailer space, they're very custom, right? There's a lot of ins and outs and needs for, how do you actually make sure that you're servicing what your customer wants in the trailer that they want to build. But as a result, as you can imagine, because it's engineering led a lot of the time, there's a bit of a disconnect between speaking the language that a customer needs and speaking the language that the engineers need to be able to actually build bombs into full trailers. And so one of the businesses that we're currently working on addresses that problem. And the way that we're doing that is we're thinking about this as a guided selling solution, we're analyzing all of the history using, a lot of vertical AI applications and data science and, kind of frontier technology to understand what are the historical patterns of buying and what do the quotes look like in the past, so that we can predetermine, well, what are the most common configurations? What are these base packages that customers are looking for? And then we pre-seed those packages as kind of like a starting point for the sales representatives within dealerships and within the networks, so that ultimately they can have those and continue to refine and edit them with customization needs that the customer comes in with, but trying to already accelerate the turnaround time to provide a quote back to a customer. Because that's a problem that we identified within market, is that this is a real frustration, is how long it can take to get a quote back when you're like, I want to go buy 100 trailers. It's like, great, like how much does it cost? Well, I'll come back to you in 2 weeks. Right? It's like, whoa, like that's because of how things are organized and structured, it's very common that you'll see that. You could ask a lot of these different types of manufacturers, not just in truck trailer manufacturing, but in any of these custom made to order, engineer to order businesses, it would be a similar problem that they face. And so, we came to that degree of understanding just by spending those months really steeping ourselves in the problem itself and having conversations just to make sure that that is a repeatable, scalable problem that we can think about solving with kind of this next wave of automation and technology.
That's super interesting. It's sort of way back when I was doing like design consulting I was actually working for a product design engineering firm. And we were doing a lot of injection molded stuff, a lot of med device things. And you'd sort of go to a supplier there and you'd say, okay, I want this plastic, I want this POM or this nylon or whatever. How much is it? And they'll come back and they'll go, well, it's not cheap. It's like, can you give me like a price per kilo or a price per ton or what is it? And they'll still kind of hesitate and not really give you anything. Eventually you kind of squeeze out something that's like, okay, well, it's maybe 2 times as much as this plastic. And that's as close as you get. And it's like, how can I get anywhere near to making a decision or kind of push things forward based on information like that?
100%. Thanks for sharing that example. I mean, it's I empathize with these suppliers and with these companies because, they're living in a like 30 years ago type of
Yeah.
data infrastructure, right? And like everyone is doing their best to get the information that they need, but the way that organizations were structured long ago is, siloed data, disconnected data, not one system not talking to another, and then you band-aid them to get them to talk. That it's like these organizations are doing their best. There's no question about that. It's just what's so fascinating and exciting about the moment that we're in is that now technology enables us to do this in a way that we never could have before, right? Deploying agents to be able to understand like where is this data, what is that data, and building that workflow to be able to orchestrate all of that in a coordinated and consolidated way. It's really changing the game in the ventures that we're building, which is just something that's just so exciting to me and to us, is like getting to be a builder in this moment and really starting to think like, how do we enjoy this part of the ride? How do we take part in this next evolution of vertical AI and the businesses that we're creating to really meet the needs of the corporate partners that we care about? Because we want them to win, right? We want to solve these problems. Everyone likes it when a problem is no longer a problem. So we do our best, and we grind, just as I'm sure you do, of going from 0 to 1 as a founder. Like we do the same with the startups that we're building. We just try to get as fast and as far ahead as we can, so that when the executives come in and take it over, they've got something that's already a rocket ship about to take off.
Yeah. And we talked a little bit about AI. Are you guys positioned in a way that you're strictly taking advantage of AI to create this as a new opportunity? Are you just deploying things with AI, or are you sort of using whatever works?
It's a great question. I mean, really, that's kind of this next wave and next chapter of like the
Right.
ventures that
Okay.
we're building is absolutely like in the portfolio companies that we've built so far, like the answer is still yes, right? Like your MVP may leverage some ML and some rules-based types of engines at the beginning, but now that we're able to figure out the path and create the infrastructures internally that allow us to accelerate a rules-based chapter to the AI focused kind of reality, like all of these ventures that we're creating are very much so vertical AI solutions, because our unique advantage when we think about UP.Labs going to market is that we are already working with corporate partners who are industry leaders within their vertical, right? Porsche, Alaska Airlines, these are real winners. These are businesses that win, right? And so, but we have access to these types of spaces where we can really go deep. Where in the past, a lot of startups would be focused on going wide, right? You have a lot of horizontal applications versus vertical applications, because investors oftentimes are like, well, this TAM isn't big enough for me. I'm not interested in that TAM because it's too small. Whereas now that narrative is changing, where people are very much interested in going for these particular industries. And UP.Labs is positioned perfectly because of our corporate partnership relationship and the knowledge that we gather as a lab team over a 2 to 3 year period, where we're like, now I'm an expert in this space and I understand the dynamics of this market. And I've built my first couple startups in that space. Imagine what it's going to be like when I build my next two, right? And maybe my next two after that. Like we've built up as many as 6 startups for some of our corporate partners, that it really, we believe, like what is different from your traditional venture studio model, where you try to hire in, either you look at companies that you bring in, or you bring in like CEO in residence to then like find and assign them a startup. We are the ones that are figuring out what is the problem. We're very much problem led, as I've reiterated again and again, to then figure out, well, what is the best solution to solve that problem? So I hope that answers your question. I know a little bit longer explanation than you asked for.
Yeah, no, it definitely does. I mean, there's a ton of parallels between even with like e-commerce as an industry, where AI and tech and advancements and just the number of companies and startups out there is meaning that a product, anything that solves a problem has to go way more niche than it did before. And it has to be very specific. And it's like, no, we're not a CRM. We're a CRM for trucking companies based in North America who only haul like oil or something like that. I don't know. Like it's
Great pitch,
just
by the
so
way. Yeah. But you're exactly right. And I'd say also building on that point, like what's so interesting about what this enables is that the impact that these types of solutions now have and that customers are requiring of these startups has dramatically changed, because exactly what you're saying, you have to go super deep and solve a specific problem. These solutions now are so tied to a particular KPI that you're going to make sure that you move, that a corporate partner or a customer is like, show me the ROI. Like, why should I invest in this? And like the technology now is able to really zero in at that degree where you're actually able to build pilots around a particular KPI that your solution is designed to solve, which is, I think, really kind of like the next frontier of successful venture building, is the ventures that are really going to be zeroed in on solving a problem and making sure that it's worth investing in that startup. Selling these days isn't about trying to convince you that you need it. It's more of listening for a problem that needs to be solved and giving you an approach that is planned to be on how you plan to solve it. And that's what every one of our portfolio companies is designed to do. It's a very specific problem that might not meet the needs. But if you are, like tanker that's trying to figure out how to have like a next generation CRM through the CPQ process, like UP.Labs is the place to talk to you. Like come talk to us and our businesses, and we'll provide demos and get pilots set up so that we can ultimately solve this problem for you.
yeah, yeah. Nice. And so maybe like zooming out a little bit to look at UP.Labs specifically, aside from, as you talked about, extending those timelines a little bit and really going like hyper niche on some of these problems, where else is UP.Labs going? You're 3 years in, right? Like what's the goal? What's the 5 year, 10 year goal?
Yeah, great question. I mean, I'd say like our and yeah, as I'm sure you know, like the most startups thinking 5 and 10 years is like a pipe dream sometimes. But I'd say to the 3 year, to answer your 10 year question, is like really the first step is making sure that we're really starting to leverage these solutions and build our own solutions in-house so that the way in which we build these startups is optimized and repeatable, right? We have a very distinct methodology that we feel very confident about, that now it's like, okay, great. Similar to your example earlier about like like working with in design or like for an agency, how do you translate it from service into product, right? How do we take what we've built as a methodology and productize that and make it so that now we have our own vertical AI solution that enables us to build our startups faster and equip it with all of the different tools that we're going to be either leveraging or building in-house to come up with a full packaged portfolio company, to create a venture that has all of the assets that it needs to be able to scale and move out quickly. Like that is really, I think, like the North Star. 5-10 years, I think very much achievable. But it's just really, I think what I learned also really as an Amazon operator is like the most important thing at the beginning is to make sure that the operating structure and process and system is in place and refined to a degree that allows you to be able to hit these strategic aspirations, right? And for us to be able to do that, we have to execute on what I was describing before of like creating, what we're calling Up Studio, which has, our part of which has our, engineering team that's LATAM based, that's really like full-time team rather than working with contractors externally. Like, how do we start to bring our team in-house and really start to create these solutions and the knowledge base on the process of building ventures? And then also thinking about how do we then think about that transition. If you look to private equity as an example, where you have, your portfolio services a lot of the time, like how can we think about that within a venture space? and do that where economics make sense for the portfolio companies that we're creating. Because, cash burn is king in the end of the day on early stage ventures. So how do we minimize burn using agentic systems and solutions for our portfolio companies that we provide as a service to them, so that then they can leverage that to scale, to build their own things, and be able to do that in a way that makes sense for them economically. I hope that probably answers your 5 to 10 year vision. But I mean, I really believe, like, even higher level, that like this model has the potential to be the new way to do corporate venture capital. And myself and the team that's at UP.Labs strongly believe in that future. We all understand the logic and have had exposure and experiences in all of these types of businesses, whether it's CVC, early stage venture building ourselves, or working at big organizations like me. Like, we understand the frictions from all of the different pieces that, like, we wouldn't be 3 years in and excited about the next 3 years were it not for that vision of redefining and changing the game on how you solve the biggest problems for these enterprises today, in a systemic and viable way that essentially creates winners across the board. We're very much abundance mindset people at UP.Labs.
Nice, nice. Well, I mean, listen, Kyle, you've certainly convinced me. You're getting me excited about the model as well. I think it's really cool how you're sort of building and validating and getting customers all at the same time, as opposed to, I guess you could say a more traditional startup, which is sort of build something, see if it works, see if people want it, and then sort of zigzag and try and get towards something that people actually want. You guys are defining a problem, looking at it very sort of objectively and saying, okay, how do we build this into a business? Not how do we scrap together and try and cobble some bits together that we're maybe going to launch as a SaaS. It's like, no, how do we find a problem? How do we solve it? How do we put that into a business? Is it worth building? Is it a business that's actually worth building? And then go ahead and execute on it with your team as well. So yeah, listen, Kyle, really, really appreciate you taking the time to jump on the podcast today. Where can people find you? Where can people find UP.Labs?
Sure. So, I mean, anyone that wants to connect, feel free to connect with me, Kyle Emory, on LinkedIn. UP.Labs, you can look for us at UP.Labs on Google, and we're a part of Up Partners, Up Ventures. So on our website, you can start to find and see a little bit more detail, but we also have LinkedIn pages. LinkedIn's probably the easiest place to start, particularly if you're a CEO that wants to come work at one of these portfolio companies, or a corporate partner that's interested in working with us in the future. But Dan, this has been a real treat. I'm so impressed by how well you sold it back to me on what we were debriefing on how we do it. I wish you the absolute best, and have really enjoyed getting to spend the last hour with you.
Thanks a lot, Kyle. It's been a treat. Pleasure's all mine. Thank you.
Cheers.